adopting AI. This is a company that's led in the application of machine learning for more than 20 years. It's just a year ago that they started incorporating generative AI capabilities. Not only did they produce an external-facing product set for enterprise customers, as we just discussed, they're also using those tools internally, and they've embraced that internally. At the same time, they did what a lot of technology companies did last year.
Contrasting opinions, resilience, and divergence. Who would have thought that a data analytics company like Palantir Technologies would be making headlines in the stock market? Recently, Palantir stock has been on a tear, reaching impressive highs and defying expectations. But here's the twist. While some analysts are singing its praises, others remain skeptical. Why the difference in opinion? Let's dive in and find out.
Which is start reducing headcount while they were growing by taking it out of places where growth no longer existed and refocusing it on places where growth was emerging, mostly around generative AI.
Now, I think, Gil, that I heard that Alex Karp, the CEO, told Morgan that the commercial momentum they were experiencing is going to help their government business. You pointed out that government business growth has been lower recently. Does that make sense to you? You have questions about that?
It will take longer. It's harder to take people out of government and put them in a boot camp or an AI boot camp to start embracing new applications. The process for government acquisition is a multi-year process.
First, let's talk about the recent trend in the tech world, generative AI. This cutting-edge technology is expected to revolutionize the global economy, with Cathie Wood, a prominent investor, predicting it will lead to the largest productivity increase ever. Wood has placed her bets on a select few companies to capitalize on this trend, and one of her top picks is Palantir Technologies. Despite selling all her shares in 2022, Wood has since re-entered the market, amassing over 12 million shares valued at around $277 million. Wedbush Securities analyst Dan Ives shares Wood's enthusiasm, citing Palantir's impressive fourth-quarter earnings report as a catalyst for optimism. Ives has upgraded his one-year price target for Palantir stock to $30 per share, implying a 32% upside from its current level. Palantir stands out for its practical application of AI, particularly through its Gotham and Foundry platforms, which transform vast amounts of data into usable insights for government and business clients. These platforms have seen increasing adoption, with Palantir's AI capabilities enhancing its value proposition. However, one concern raised in Palantir stock analysis is the lack of a competitive moat. While Palantir's early leadership position is advantageous, other companies are also leveraging AI to replicate its offerings. Despite its lofty valuation, with metrics like 22 times sales and 70 times free cash flow, Palantir's leadership position in the AI industry makes it a compelling investment opportunity. Now, Wall Street has witnessed the rise of Palantir Technologies as a symbol of resilience and promise within the stock market. Despite initial skepticism from analysts, Palantir has defied the odds, closing trading at $25.08 on February 29th, with a notable 2.7% increase. This upward trajectory is not merely a fleeting spike, but a consistent trend, with Palantir stock surging by 6.63% over the past 5 days and an impressive 53.58% over the past month. The remarkable surge in Palantir's stock price is particularly noteworthy given the backdrop of skepticism from certain market analysts who have maintained a reduced stance on the stock. However, despite this skepticism, Palantir's strong financial performance and strategic moves have attracted significant institutional investment, indicating a robust vote of confidence in the company's future prospects. Moreover, analysts have begun revising their price targets upward for Palantir, albeit cautiously. The company's Q4 report surpassed expectations, showcasing better-than-expected revenue, a notable acceleration in commercial business growth, and a reversal from the previous year's loss. Despite these positive developments, the average price target from 13 Wall Street analysts over the last 3 months stands at $18.55, contrasting with the current trading price and suggesting a minus 26.04% change. However, there remains considerable potential for growth in Palantir stock. The company's forays into sectors such as healthcare, energy, and manufacturing underscore its expansive potential for application and expansion. With a strategic direction aligned with its robust Q4 performance and positive trend in stock price, Palantir appears well-positioned to reach new heights in 2024, potentially shifting analyst sentiment more favorably. Now, let's examine why some analysts may underestimate Palantir's potential. Despite appearances of overvaluation, Keith Fitzgerald suggests that sell-side analysts might intentionally keep their price targets low to unsettle retail investors. By maintaining a reduced sentiment, they aim to induce selling, potentially causing a drop in share price and presenting an entry point for savvy investors. Palantir's Q4 results indicate a promising outlook for 2024, with business expected to continue accelerating. However, the company's cautious guidance for 2024 forecasts only a 20% growth on top of 2023's high-teen advance. Despite this, the 30% growth in commercial business and expansion into new markets provide reasons for optimism. Although analysts have a sell rating on the stock, institutions are actively buying. Institutions owned approximately 35% of Palantir's shares, with notable increases in activity seen in Q3 2023 and Q1 2024. Despite HSBC downgrading Palantir to hold, citing valuation concerns, the stock trades at 16x earnings and is expected to grow at a 20% plus CAGR over the next 4 years. Analysts are raising their price targets post-Q4 release, indicating a disconnect between analyst sentiment and market performance. MarketBeat.com reports 7 revisions, including 5 boosted price targets and 2 upgrades, yet the consensus estimate still lags behind the market, assuming a 30% decline in the stock price, which seems unlikely given the technical outlook. But before we move on, we just want to thank you for watching this far. Meanwhile, the term Messi of AI has been thrown around about Palantir, signaling high expectations for the company in the AI space. This year could be pivotal for Palantir, touted as the best pure-play AI stock. The focus on AI's foundational aspects, particularly in developing powerful processors for large language models, sets the stage for Palantir's role in shaping the AI revolution's future waves. Palantir stands out for its practical application of AI in data analytics through its Gotham and Foundry platforms catering to government and business sectors. Its ability to transform vast and disparate data into actionable insights has garnered significant attention, with its AI platform further enhancing these capabilities through machine learning. The company's strategic positioning, especially in critical sectors like government, underscores its potential for prolonged growth. But let's not forget about Palantir's competition in the AI market. Palantir Technologies and NVIDIA have been standout performers in this burgeoning industry, with Palantir climbing 180% and NVIDIA soaring 210% since January. However, when it comes to long-term investments, investors need to look beyond recent gains and assess each company's potential moving forward. Thanks to its high-performance GPU chips, NVIDIA has established itself as a dominant force in the AI sector. The company's revenue growth has skyrocketed, surpassing 200% recently, fueled by the increasing demand for AI chips. Analysts are optimistic about NVIDIA's future, projecting a 39% annual earnings growth rate, a remarkable feat for a company of its size. On the other hand, Palantir, with a market cap of $40 billion, is gaining momentum by securing new business from both government and private sectors. Despite its smaller size than NVIDIA, Palantir's agility allows for faster growth. However, expecting Palantir to surpass NVIDIA's market cap of $1.1 trillion by 2030 may be overly ambitious. Even with aggressive growth projections of 50% annual earnings for a decade, Palantir's valuation would still be a fraction of NVIDIA's current worth. In conclusion, while Palantir shows promise in the AI industry, NVIDIA's established market position and robust growth trajectory make it a formidable competitor. Investors should consider both companies' strengths and growth potential carefully before making investment decisions. So now, do we see Palantir making a pivotal turn? The stock's journey since its IPO has been a roller coaster, from initial hype to a subsequent decline, followed by a significant rebound. Technical analysis reveals a classic pattern of a bottom formation marked by a head and shoulders pattern and a surge in trading volume coinciding with positive FQ1 results in 2023. Since then, trading volume has remained high, propelling the stock price upwards by 175%. Palantir has now crossed a crucial pivot point in its trading range, signaling a potential continuation of its upward trajectory. The next target for the stock is around $29, possibly reaching $38.50 and retesting its all-time high if market conditions remain favorable. If Q1 results align with previous trends and forecasts for 2024, Palantir could see further gains, even without unanimous support from analysts. Positive news may prompt analysts to revise their outlook, further fueling investor confidence and potentially driving the stock to new highs. Now, we encourage you to research and consider diverse perspectives before making investment decisions. So, will Palantir continue its ascent, or is a reversal on the horizon? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about the realities of investing in Palantir, just click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.